All right. So we're talking about cryptocurrency. What is cryptocurrency?
Well, cryptocurrency is essentially a dollar that you can't touch. You've heard of vaporware, it's kind of vapor money. It is in an account in your name and has a theoretic value, but it's not something that you can put in your pocket and carry around town and put in a vending machine.
So that's kind of a hard concept to kind of think of. Is that similar to like credit cards and things like that?
No, I don't think it's similar to a credit card at all, because a credit card is merely a way of doing accounting on how you spend your money, or in that case, how you run up your credit. Cryptocurrency is literally having value stored in the air, so to speak, just in an account, and you can't cash that account out and turn it into something that you can put into your pocket.
Gotcha. So what's cryptocurrency for?
Well, it's an alternative way of storing value and being able to spend your money and do transactions. So that's the idea. Theoretically, someday we would come to the point where everything is vapor, all dollars are vapor, so to speak, and we never actually touch our money. I just merely transfer money from my account over to yours, which we can already do with some of the apps that are out there, but that's still transferring a hard dollar that you can cash in. And crypto is not something that can be cashed in.
Gotcha. So I've heard crypto numbers in terms of it going up and down and things like that. What does that mean?
Are you talking about value?
I am.
Well, every day the dollar changes in value and the British pound changes in value, and whatever cryptocurrency you own changes in value as well. The difference is the dollar, for example, is very stable in its value. It changes very little, microscopically from day to day. Whereas cryptocurrency is wildly volatile and can change in value by 15 or 20% in one day's time. And the reason for that is because the dollar is backed by the United States government. And anytime a unit of currency is backed by a government agency, what they're saying is, we're going to guarantee you that tomorrow that dollar will be worth essentially the same thing it is today, and next week it'll be worth what it is this week. But cryptocurrency isn't backed by anyone or anything, it's just worth whatever you think it is. So if enough people think it's something to have, the price shoots up. If enough people think it's a bad thing and you shouldn't own it, then the price falls significantly.
Gotcha. So in a way, it's kind of similar to like the stock market as well?
Well, I wouldn't say that. Because the stock market is based on an asset. For example, if you own stock in a company, that company has got buildings and trucks and a manufacturing plant and employees, and they're doing something and producing something. Now, the value of what they're doing and producing and what all those assets happens to be could change from day to day, or people's perception of that value. But crypto doesn't have any of those assets backing it. The value of crypto, the pricing of crypto, is totally determined by just what people think it's worth that day.
Gotcha. So if I wanted to get into it, how would I do so?
Well, you can buy crypto on any number of exchanges depending on which type you want to buy. You can just go online, and in most of those exchanges you can open an account. They'll establish what they call a wallet for you, and you literally send them some money through your credit card or Venmo it to them, or however you choose to fund it. You send them dollars, and they turn those dollars into crypto. And then tomorrow, the amount of money that you turned into crypto may actually be worth more in dollar terms or less in dollar terms, depending on what the price is on crypto between now and tomorrow.
So what would you say would be the pros and cons of trying to get into crypto?
Well, crypto's fine if that's what you want to do and you like to gamble. But it is a gamble, you need to realize that. And so, first of all, I don't think you should gamble with money that you can't lose, because crypto is highly volatile and there's the opportunity for you to lose significant amounts of money. Now, my job is to help people make sound financial decisions and to retire and stay that way. And we don't do that buying things that are outrageously volatile. So it's the volatility that's the big con to crypto. The positive side is we have seen moments where crypto really shot up in value. But I would liken it to having a lottery ticket. You know, when you buy a lottery ticket, well, most of the time, like 99.9999% of the time, that lottery ticket is worth nothing. Mm-hmm. And what you're doing is you're just hoping you'll be the 0.00001% of the time that the lottery ticket's worth something.
Gotcha. So in your recommendation, if you decide to go into into crypto, use it as something if you've got a little extra. That you
Only a
use.
little extra. You never put your serious bread and milk money in crypto. You don't put your serious retirement money in crypto.